Hi, my name is Justin Brown. I'm the Director of Investments here at Greenspring Advisors and a member of Greenspring's Investment Committee. Today, I'll be discussing some key highlights from the fourth quarter of 2023. Let's kick things off by looking at asset class returns. After a negative third quarter for most asset classes, the fourth quarter saw a shift in narrative as many investors began showing optimism that there may be a potential Fed pivot on the horizon. Not only were all major asset classes in green for the quarter, but they all posted returns that were much higher than their quarterly average. Global real estate led the way, followed by US stocks. Bonds posted uniquely strong returns as well, with US bonds having their best quarterly return since 1989. Global bonds also had their best return for the history of the index, which stems all the way back to 1990. This was welcome news for investors following a tough 18-month stretch for the bond asset class. Long-term returns look strong as well. Looking at the 1, 5, and 10-year time periods, all major asset classes again were in the green. Despite the negative news that has surrounded markets for the past few years, markets have delivered strong returns for investors that have stayed invested and avoided trying to time the market. Shifting gears now, for the special topic this quarter, we thought it would be helpful to discuss a little bit more about our investment philosophy. We strongly believe in the investment concept of targeting the size premium and value premium that has shown up historically in markets. The size premium is essentially the return difference between small cap stocks and large cap stocks. The value premium is the return difference between stocks with low relative prices to their expected future cash flows versus stocks with high relative prices to their expected future cash flows. Research shows that there tends to be a return premium associated with these smaller companies and more value-oriented companies, and this can be observed across many different time periods throughout different markets across the world. For our portfolios, to take advantage of these historical premiums, we lean into these types of stocks that we believe provide our clients with higher expected returns. To help illustrate this, we compared how these premiums have played out throughout history, and we have nearly 100 years of benchmark returns to do so. The chart on the left shows the percent of time that small caps have outperformed large caps on a rolling 1, 5, and 10-year basis. Looking at these returns, small caps have outperformed large caps 55, 59, and 68% of the time. On the right, we're looking at the percent of time that value has outperformed growth over the 1, 5, and 10-year rolling periods. Here, value has outperformed 59, 70, and 78% of the time. So what does this mean? This means two things. First, while these premiums have existed historically, just because you invest in small and value stocks does not mean that you automatically outperform across every period, especially in the short term. Second, the longer you invest in these premiums, the more likely you are to benefit from the premium and to outperform. While the last slide showed how often small caps and value have outperformed over time, the next question is, by how much have they outperformed? Looking at these same periods, the numbers in green show the performance premium and how strong it's been across these different periods. Not only have the premiums existed far more often than not, but overall, the premiums have delivered notably higher returns. Again, while there will be environments that may not favor these premiums, it's important to understand the importance of sticking with your investment strategy. You do not want to endure some of these downsides and then change investment strategies and miss out on the potential upside to come if history were to repeat itself and the premium were to come back into favor. There have been many different market cycles throughout the time horizon shown here. Despite this, as we can see from these slides, these premiums have weathered any storms that have come their way and outperformed in a notable way. On behalf of the Investment Committee at Greenspring Advisors, I want to thank you for your time today. As always, please feel free to reach out to us with any questions.